Hello? Okay, this is working. So this is my boring log about what I did last week and where I think the market will go. And yeah, just I'm just gonna tell what I did last week and what I think might happen and what my plan is. So the S&P 500, this is the SPY, this is the daily chart, and we're so I don't I have no clue what the market is gonna do, really, because okay, let me show you an equation first. This equation is basically how I determine where the price of SPY is gonna go to. So basically, I oh shoot. Dude. So basically, this thing right here, the SPY's price as is the future, which I call the future equilibrium price, is determined by the future buying pressure as measured by future dollar volume, which is just the total amount of money being pushed into SPY in a single day, and that is divided by the selling pressure, which is the total amount of shares being sold by SPY in a single day. And so when you take the total amount of money that you predict in the future divided by the total amount of shares being sold, then the equilibrium price will be whatever price you think the SPY will set at, that the SPY will be at. So basically, what that means for this chart is that basically what that says is that if the volume increases, if volume increases, then the price of SPY will go down, and if volume decreases, then as long as the buying pressure remains the same, then the SPY price will go up. So basically, that's what the that's what my equation says. And how do I even? It's been so long since I used this. How do I even get rid of this stuff? And if the buying pressure increases, then obviously the price of SPY will go up as long as the volume doesn't also increase. So what's happening right now? Crap. Was I? So SPY's sitting at 732.29, 730 43.29. So basically, what happened is over the past 10 days, we've been going up, and the volume has been steadily decreasing, which is which which makes sense, right? If you go up, if the volume decreases, then the equilibrium price, provided that the buying pressure remains the same, then the equilibrium price should increase. And eventually it got to this point where where it volume contracted so much that it could not contract anymore, and then we started seeing increasing volume, and which pushed the price of SPY's equilibrium price down. And so that's what happened yesterday. We went down on because the volume increased. And so the question now is, which I don't know how to answer, is um is why is this okay? Is is the SPY's volume gonna go up to 80 or back down to 40 million shares per day? And if it goes up to 80, then we will SPY's equilibrium price will go down. And if it contracts back to 40, then SPY's equilibrium price will go back up to the here. So and I really don't know if the sellers will come in. I don't know. Like, I have no idea how to predict this. I mean, historically, like we we were able in the past month, 2 months, we were able to hit this much volume, selling volume. So technically, we can increase to 100, and if it does that, then we will go down. And if something really weird happens, like some what one guy I listen to calls a black swan event, like another deep seek moment or something like that, or some type of war that gets even worse, then we could hit. If at some point we hit like this level of volume, then if the volume goes up to here, then we will just crash, right? So I don't know how high the volume will go, and sometimes even with even with low volume, sometimes the buying pressure, as measured by dollar volume, it can just decrease too. And if it decreases, then we will go down. But I don't know. I don't know what's gonna happen to the volume and the dollar volume. So I can't really predict where SPY will go. So I mean, there's a lot of people who are saying that this is the top. Like, this is the top. This is the top. There's one guy who says this is the top, and that there's signs of SPY going down because of the VIX going up, or the breadth, the amount of people, the amount of stocks that are above their 50-day moving average, simple moving average, is too high. Stuff like that. Stuff like that. He says that this is the top and that we're gonna go down. Then there's this other guy who says that we should expect a couple of days of because we're blowing below the 20 EMA. We should expect a couple of days of downward move. And then there's another guy who says that if a black swan event happens, like a deep seek moment, then we can expect another downward move. Or if nothing happens, then we can continue going up. But if we do go up, like, how high are we gonna go? Like, let's say that this volume contracts back down to here, and that if it does that, then we'll just get back up to here at most. And And if unless for some reason there's just these surprise reserve buyers and they fail to materialize all through this entire area, and if they and suddenly they come in, this whole area is so optimistic, right? So for some, how can a sudden high amount of buyers come in and then that didn't come in here, and if all these buyers come in and the buying pressure increases, then maybe we can go back up to new all-time highs. But I don't see how there are any buyers, so I don't know. So I have no idea what the market's gonna do, and but the put call ratio yesterday was pretty high. Like, look at that. The put call ratio yesterday was 9.2, 0.92, and it was 0.84 on this one. And that means there's a lot of people shorting the market right now. And if the shorters are artificial, like if the people who are shorting yesterday are just are the smart short option traders, then you should follow their signal and assume that the market will keep going down. But if they're just the general retailers and the general people, the market as a whole who is shorting, then we could have some coverers come in and then the market will go up. So basically, my strategy, like, I've been shorting stocks lately, and I haven't been even looking at the market too much. So my strategy lately is crazy this this shorting strategy that I've been testing, and it's called my low volume stagnation strategy. Basically, it's this, which worked pretty well the whole past week. It's basically I try to find a fad loss, and basically I try to find a fad, and the fad is an upward move that is 100% or more over a period of several months, and I try to find increasing volume, and then I try to find a stagnation period where there is decreasing volume, and then I short it right around here, and that's been working out pretty well lately. And see, I shorted here and I covered here, then I shorted it here and I covered here, and that worked pretty well. But what I'm not sure is like all these stocks that I shorted this past week, they they I'm not sure if they went down because my low volume stagnation strategy is working, or just because all the memory and the semiconductor stocks are crashing by themselves. The whole market of semiconductor stocks are crashing. I don't know what is happening. So I don't know how reliable my strategy is because I just started doing it. But like, let me show you how I have some faith in the strategy, because let me show you how effective it is in the past. When I look at some past examples, why my computer, my internet connection has failed. Okay. So basically, like this strategy, which I saw first in Hood, like it. That's how I started doing it. Was I looked at Hood and Sophie, and I saw this pattern where this pattern showed up. See, first, the Fed increased the price 200x and on high volume, which shows that the Fed is there. Really, it's there. It's doing it. It's increasing. There's a fad going on, and then I searched for a period of low volume stagnation right here, followed by a sell off, which usually follows by a sell off. So that that that's how that's when I first learned about the strategy, and it was pretty cool. So that's what I'm trying to duplicate. And the basically the idea is that when there's a low volume stagnation on low volume, what happens is that the buyers it pre it for it shows that the buyers are about to drop tremendously, and if the buyers drop, then the sellers will increase too, probably from all the buyers who bought right in this area. And basically, the low volume stagnation strategy start it 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 shows when it does this thing, it shows that the buying pressure will soon decrease dramatically, and that will start to sell off. And so that's basically my low volume stagnation strategy. And let me show you another case of how cool the strategy is. Sophie. Oh boy. Very good. So just look at Sophie. Look at how it went up to 100% on very high volume, and then for a period of 1 to 2 months, the volume just stagnates. And then what happens after that? The buyers just stop completely. The buyers stop right here, but then they drop dramatically, even more, and so the price goes down. And there's another example of this strategy. Look at Neil. Neil. Oh, here's one. So look at this high volume, upward move 200%, and high volume, and then a period of low volume stagnation. Period of low volume stagnation, followed by a crash. So basically, that was pretty nice. But this is not the only one I want to look at. There was something a long time ago that was pretty cool. I have to go back 5 years. What? Still nothing. Okay, I have to go down even more. 10 years. Oh, there. Here we go. See how we go up like 5x the price, and there's all this high volume, and then we go to a period of low volume stagnation, and then that shows that the buyers are just losing interest, and the fat is depleting, and the buyers are starting to stop, and then we crash because the buyers then dramatically stop. That's basically my low volume stagnation strategy is a is it's a buyer It's a fad loss strategy. We detect the fad with the high volume. That detects the fad, and then we see the low volume stagnation right here, which shows that the fad is decreasing, and then the fad really decreases, and that's what is super cool about it. So I'm hoping to find that in today's markets. And there's another one too. There's the SMCI. Let me show you SMCI. Damn it. Delayed data. SMCI. Okay, here we go. Look at SMCI. See, we had a fad. Look at that high volume. And then we had a period of complete fad loss. What happened? Oh, it's right here. See, look at this period of fad loss where the volume went. Oh, this is not a volume. This is the volume went down dramatically, which shows that the buyers are just forgetting about the stock basically. Like first they were all into the stock as shown by all this volume, and then the buyers just forgot about the stock. That's called the fad loss stage, the low volume stagnation stage, and then after that, the buyers really drop. And so this one took like 3 months to really drop, but eventually it dropped. So basically, that's my low volume stagnation strategy, which should work theoretically based on these 5 examples that I just showed you. But um, I don't know if it's working right in this market because all the tech stocks dropped in the last week or 2 weeks, and I don't know how valuable my strategy is in the current market because all the tech stocks were dropping, and I don't like look at Intel. Intel's doing something sort of like it. Like it went up on high volume. Then we're sort of doing this low volume strategy. I mean, it's not really doing that, but Intel shows what's happening to the entire market. I mean, it's not really low volume here, so Intel shows what's happening to the entire semiconductor and all these markets. They're all dropping. And I don't know how reliable my strategy is in this market because they're all dropping. All of them are dropping. Let me show you. Here's one that I thought was really cool because see, look at that. We had a fadding. There's a huge fad, and then we had a low volume stagnation right around here, and then we start dropping. And that'd be great, except that they're all dropping. All the semiconductors are dropping. I don't know what this company is. Idea, is it a software stock? I don't know what it is. I forgot. Let me show you another one that I shorted. Simo. This was a semiconductor stock. Look at that. It went up, high volume, and then it went through a period of low volume stagnation, and now we're dropping. But it said they're all dropping, so I don't know how reliable this pattern is in today's market. And so basically, that sums up what I've been doing for the last 2 weeks. I also bought some Google. Like I've been buying Google for a while. I bought Google all the way over here. Yeah, I got owned by Google because I thought. See what I thought. See what I thought was that I looked at this Google, this this buying pressure. I looked at it and I saw $6 billion of buying pressure, and I thought that there is no way that Google's supposed to be at like 20 billion, 12 billion buying pressure, just from my estimates. And so I bought it, but then it dropped all the way down. And that the reason it dropped is not because Google's. I was for a long time. I was like, why is Google dropping? Because its buying pressure should be at 12, right? 12 billion buying pressure. And the reason I just figured out last week was because there's a second Google. There's another Google share right here. And because there's another share, it is already at 18 to 15 billion buying pressure. If you add this number with the number from the other chart. So all this time I've been like thinking Google was underpriced, and it's not. And then I held on. I held on. So I finally sold it right when it crashed on last Thursday. I bought it right around. I held on to it all the way from this entire area. I held on to it, and then I thought when I saw this um inverse head and shoulder, like I saw this was the left shoulder, head, and right shoulder with low volume, and when I saw that, I was like, oh, Google was doing an inverse head and shoulder, so and the sellers are exhausted, so it must be going up. But I almost added to my position right around here in the pre-market, and I almost added to it. And I'm so glad I didn't add it to it because I saw trading with Ashley, and she said if you are super sure and super confident, and when you're like that, you should not be. Uh, when you're super confident, you're so confident that you add to your make a big position, and then you look at and you every day you look at your position, then that means that the market's about to kill you before being overly confident. So I didn't add, and I'm glad I didn't because this was the day. This was the day that all the tech stocks dropped dramatically. This is a SPY, by the way, this pink thing. And Google, for the longest time, did not drop. And I was like, oh, maybe Google really is out of sellers. But then at some point, uh, in this intraday chart, for some reason, whatever reason, just like it didn't drop. So I thought, oh, Google's doing fine. And then all of a sudden it dropped. And I was like, oh, maybe it'll go up because it's doing stopping anomalies right here. But eventually I was forced to sell right around here. And I'm glad I did because I don't know what's going to happen to Google, but it went down a lot more. I have no idea what's going to happen to Google tomorrow. So I'm finally out of Google. And let me show you something else. I'm so mad at this stock, this chart right here. I was actually short right around here, and I'm glad I got out of the short because I finally convinced myself that SNDK was gonna go up with the market, and it did. It went up, and so basically, I kind of wanted. I kind of wanted to short again, but I told myself that $2,000 is just out of my. I cannot take a. over trading. That would if I start shorting it again here, I cannot take that big of a position because it's too big. So I decided not to short it, and and look what I did. Like this whole low volume stagnation. Low volume means that buyers are decreasing, and there's buyers auction, and then finally the the buyers really decreased, and the sellers came in, and we went down all the way down to 1400, and that was like not cool, man, because this makes me mad because I wish I shorted it here instead of shorting it here and then forced the cover right here. This makes me mad that it finally went down because all the semiconductors and memory stocks went down. But I'm not gonna short it anytime soon because it's doing the volume is coming in, the dip buying volume is coming in, and that's kind of the same with MU too. Look at MU. Look at what happened today, yesterday on Friday. The volume, the dip buying volume came in, and so I don't think that's gonna stop the selling for a while because there was a tremendous sellers. They try to push it down, but the dip buying volume came in, and now every time someone sells, he becomes a future buyer because of the initial wave of dip buying. So I think that one guy trading with Josh, he's probably right because um because the, this high volume right here is a bottoming anomaly. So it should keep the price up for a while. But look at this. Look, these two candles and this high volume. This is a topping anomaly. So I wish I shorted this too because at some point 2 weeks ago, the the total buying pressure for the stock reached 100 billion a day, and that was pretty crazy because there's nothing on the market that can be that high. So I wish I shorted it then, because I kind of had this feeling that if I'd known better, I would have known that that was the top, and that uh, the sellers would, I mean, the buying pressure would decrease, and this blue bar is just um it's just closing price times closing volume. That's the buying pressure. So that's what happened. It decreased, and then the ME went down. But now it has hit. The volume has increased again, and so dip buyers are coming in. So I don't think MU is gonna go down anymore. So I don't know. Like I have this really feeling that that the market's gonna go down. But if it goes down, what's gonna come down with it? What is gonna it? A lot of these stocks that I shorted yesterday, last week, are they gonna continue going down? Are they? Why is this thing? Oh, it's this thing again. Oh, come on. Is Are these stocks all gonna continue going down? Because I feel like they've gone far enough down in terms of relative to how much they rallied, because um, what I need to do is I need to create a trading plan that has a defined entries, the entries I know are pretty good, but I need to define I need a trading plan that defines my exits. And currently, my exit is just basically if it's just a gut feeling, and that's not good enough. And like, there, well, I was pretty happy with this exit because look at this thing. Look at how the volume increased. That's dip buyers. So I'm pretty happy with this exit. But this exit, I'm not so sure. I shorted this a little bit, but I don't know how much, whether it can continue going down, maybe even more. But I already covered because just based on gut feeling again. So I need a real way to. I need to look at past instances of low volume consolidation, stagnation, and I need to figure out how much they went down and how much to predict, and the signals I need to look at to see whether the downward move has ended. And I don't know. I don't have this whole apparatus with me. That's why I need to develop. So that's my trading plan. Like I don't trade markets anymore. I'm currently trying to research Mark Minervini and how he tries to predict upward big rally stocks to add my to my trading plans. Because right now all I have is a short plan, a low volume stagnation plan that's just for shorting. I'm trying to add a way to predict a big rallying, how whether a stock will rally for a long time. And I don't have a method for that. So I'm reading his book to add to my 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 setups. So basically that's what's happening right now. So I'm not trading the market anymore. I have no idea what the market will do. I don't have a clue. I don't trade the market anymore.